All right, what's going on, everybody? Welcome to another live Forex session. It is June 22nd, 2022. And what we're going to be doing is marking up the EU pair, which is the euro versus the US dollar. Now, before we do that, we're going to check the news. And as we can see, when it comes to the euro, looks like the euro is going to be under normal news today. Especially starting at 10 o'clock. Now, the US dollar is going to be under some news at 9:30. So we're going to look out for that. So with that being said, we're going to go ahead and get started. And so the very first thing we're going to do is mark up the 15-minute to the 4-hour time frame. So I'm going to go all the way back in price, as far back as I can, to mark up market structure. So that way we can get a clear idea of what price did in the past, so we can get an idea of what it might do in the future. Be right back. All right, so this is as far back as price will go. So now we're going to mark up institutional support and resistance. Now, what do I mean by institutional support and resistance? Well, when I'm marking up my market structure, I want to hit areas where the institutions have actually gathered a lot of liquidity in the past and made a big move. That's what I look for. Why do I do that? Because that's where I actually get an idea of where price actually hit. So that way, when I'm trading, I can make the best trading decisions. And really, to make the best trading decisions is really to trade when the banks are trading. They have too much liquidity in the market because they have the most money, and they're one of the biggest players in this market. So the mistake that a lot of retail traders make is they don't know when those banks are making those moves. Or, you know, it's not enough data to know exactly when the banks are going to move. But once you figure out that data and figure out when they trade, you're going to be able to be a more consistent, profitable trader because you're trading when they are. So that's the reason why I mark up these areas. You know, you see here, they gather a lot of liquidity in this area. That's what made price make this big giant move. You know, a lot of retail traders always ask themselves, how can I consistently get into big moves like this? I want to kind of show you guys how to do that. So I did this on 15-minute time frame. So now we're going to go to 30-minute. We're going to do the same exact thing. Back to my last vertical line, which is here. So now we're going to mark up these areas and these areas. So we'll put a vertical line here. Price hit this level quite a few times and then drops, and then really drops eventually. Change this to green, so that way I know that this is the 30-minute time frame market structure. I'll try to get this level. Yeah, that's good. Then going to get these areas here. Here. And then place this one. Area right here. And then the last one down here. Now I'm going to actually mark up horizontal lines on these here. I'm going to make these light green as well. right? So now that we got these marked up, this one up. There we go. Now we're going to move on to the 1 hour time frame and do the same exact thing. So with the 1 hour time frame, put that. And now you see there's a lot of areas to where you see that price testing liquidity and made a big giant move to the next zone or punched through the next zone and went to the zone after that. So that's a good sign that that's actually good support and resistance sign for the institutions. Because that's what's going to give you the most consistent moves, and that's what you want when you trade. You know, you want to be as consistent as possible. You know, you see how price is hitting these areas with liquidity and it made it go all the way up to here. That's the institutions putting in those orders. So we're going to change this to red here. And so far, let's see, I think that's all. So then we're going to move on to the 4 hour. As you can see, these are all the, you know, zones that we've drawn through from, you know, 15-minute time frame to the 4 hour time frame. Now I'm going to actually mark up these areas. So I'm going to mark up our bottom floor, since this is the very bottom of price. I'll change this to purple. Then I'm probably going to put a horizontal line here. And then that's it. Now I'm going to move back to the 15-minute time frame. Now we're back at the 15-minute time frame. You can see that we marked up these zones perfectly. They're interacting with current price pretty well. I'm probably going to move this up a little bit more. And so now what we're going to do is we completed step 1. Now we're going to actually, we got step 2, and that's when we're going to identify the trend. Now, just even looking at this, price is trending down. I can already see it. We can kind of even see that on the RSI, that price is starting to trend in the downward motion. So I'll take a trend line. And I'm going to label this overall bearish. Right now, so overall bearish, and that's what we see. Now, the very next thing that I do after that is I identify the most recent high and most recent low using my indicator, the higher high and lower low strategy indicator. So if I want price to buy up, look at the most recent high, and I can kind of see that here. This is the most recent lower high. So if I want price to buy up, then I'll see it push through here. So then I'm going to change this to break and retest for the buy. Then I look at the most recent low, which I can kind of see that maybe down here. Circle it. So if I want price to sell, then I want to see a break and retest to sell and go down here. So let me grab the other test line here for the sell. The reason why I do this is because remember I told you before, you want to get the most consistent, most profitable trades when the banks trade. Now, when the institutions, when liquidity finally sets in at the 9:30 bell, the institutions are going to try to stomp you out with fake outs. And that's what they do. They try to stomp everybody out with fake outs by gathering their stop losses. And then once they're done stomping out, retail traders, by going back and forth and faking them out, then they finally make the true move, whether it's going for a sell or for a buy. So your job as a profitable trader is to avoid getting faked out and wait for those institutions to stop all those traders out because they don't know how the institutions move. And then when they finally make the true move, whether it's a buy or sell, you get into that move because they're more likely that move is going to be consistent and profitable. So that's something that I know about the institutions. Now, next step is turn on the supply demand indicator. This is my institutional indicator, okay? Now, let me do something here. Let me kind of zoom out so we can kind of see. Yeah, that's better. Let me pause this recording until I get this screen right. Okay, so now that I got my screen right, so now the very next thing we're going to do is turn on the supply demand indicator. So when I use this indicator, this lets me know what areas where there's imbalance gaps. Now, the reason why I trade imbalance gaps is solely for the reason of because typically when the banks are actually putting in these huge orders, which causes these big moves, it creates a lot of imbalance of price to where even though they make a lot of money off of that move, but there's a lot of other orders that didn't get filled. So they have to come back and mitigate this area like they did down to here, they did down to here, they did down to here. Now, in all honesty, now that I'm actually kind of looking at market structure, I want to actually believe that price is actually bullish at this point. So I'm actually going to kind of change the trend line. Now, if price ends up being bearish originally, then well, in reality, price is overall bearish. I'm gonna stick with that for now. And then if I have to change my trend line, then I'll change it. So I'll say overall bearish for now. So what I typically do is when I look at the imbalance candles, then it gives me an idea of more likely where price is probably going to go. Now, when I look at this recent move here, I see that this down move created a lot of imbalance as well. Now, they came back and mitigated half of this area. They still have all this to fill, and they have all this to fill. So it lets me know that eventually they're going to have to buy a price up to mitigate this area to make their money back. Because with this down move, they made a lot of money off of these sells, but there's a lot of buy orders that put them in a huge negative as well. So they need to make that money back. So there's also an imbalance gap down here that caused all of this, and they medicate down to this area, but it's still area down here they have to fill. So what I typically do is I typically go ahead and set my risk to reward tools. And then I wait to see which way price is going to break and which way it's going to go. And give myself at least a risk to reward of 1 from each of my trades or more. So if price sells down to here, I'm going to want to get at least, let's say 20 plus pips here. At least maybe 20 pips in the first one. And then this is going to be TP1. And then if they happen to bring price all the way down and fill this imbalance gap here, this is going to be TP2. Which is going to be 41 pips. Now that's if price buys up. Now, they decide to buy, that's if price decides to sell. If they decide to buy up price, then I'm looking for this to kind of actually be stop loss here. And then I'm looking to get at least 20 pips. And then I have TP2 go all the way up to this wick, to this next high here. And that's going to be a total of 40. So then what I'm going to do is start labeling this. So this is 21 plus pips. This is 20 plus pips here. Right. That's what I'm going to be looking for. So when I get real close to the 9:30 bell, that's what I wait for. Now, what I'm going to do is post my rules here. Those are my rules in front of me. Move it all the way. There we go. Now what I'm going to do is set my alarms, my alerts, rather. Take profit zones, so like that. All right, guys, so I set my alerts for everything. So now we're going to move on to the next step, and that is turn on the Delorean EMA indicator. Now, typically I use this indicator as, this is the only EMA indicator I use as extra confirmation. So anytime when the yellow EMA is over the red EMA, and it's above or below the 50 EMA, that usually is a sign of a very strong candle or trend. Now, in this case, price is probably overall bullish because price is above the 50 EMA and it's testing this area. So what I'm going to do is just make an adjustment. So that price is probably overall bullish right now. Now, price crosses this trend line and crosses this line and goes down, then you know for sure it's bearish. But since it's above the 50 EMA, I'm going to say that price is probably bearish. I mean, bullish at this point. But that could change depending on where the price decides to go. So what I'm going to do is say that this is overall bullish. So that's what I'm going to say at this point. So probably going to start going bullish, but we'll see. But of course, price could close down below this EMA and start to go down here. Then we're bearish at this point. At that point. So that's what I'm going to say since it's over the 50 EMA. But if it closes down and goes below the 50 EMA, then I'll adjust my trend line because then I know that it's shifting. Now, what we're going to do is we're going to sit on our hands and wait. Now, we're expecting some news at 8:30. And that's the reason why I wait between 8:15 to 12 p.m. to look out for fake outs and look out for, liquidity. Because sometimes, depending on some pairs make a big move before the 9:30 bell. Some of them don't make the move until afterwards. So that's why I start at 8:15. That's my kind of lookout to see what price is really doing. Of course, the New York session has officially started. It started at 8 o'clock. So we're almost at the 8:15 bell. And we got the 8:30 bell, and that's when the news was set here. We just need to wait and see what price is going to do. Once the institutions finally make their move, and that's what we're going to look for, and we're going to jump into that. So what we're going to do is pause this recording, and we'll see what happens. Here's something else to note, guys. I noticed that price is rejecting this 800 EMA off of Delorean. There's a lot of wick here. So that's probably a sign that price is resisting and it's probably going to sell. It's probably a sign for that, maybe. But what I'm probably going to do is, since this is the 800 EMA, make sure I'm correct. Yeah, the 800 EMA. If price busts through the 800 EMA and busts through this line here, we might be clear for a buy. So that's what I'm going to kind of look for. So kind of just adjust my areas. So then if I see price bust through this and close above and then it keeps on buying the bust through here, then we're probably ready for a buy. So that's what I'm going to really look for. Now, we got 4 minutes until the news set in. So I'm going to pause this recording and see what price ends up doing. Looks like it's pushing up, but we'll see what price is going to end up doing. So I'll be right back. All right, so the 8:30 news is setting in now. Now I decided to move my other breakout, break and retest line back up to where it originally was. Now, the price happens to buy it up here and then keeps on buying up and is pushing past here. It's probably going to be a solid buy, but I might jump in if I don't get faked out. But we're at the 9:30, we're at the 8:30 news candle now. So now we got to see what price is going to do. But I've already made my decision. I'm going to wait until the 9:45 bell before I look for an opportunity. It's going to be an hour from now. So we'll see what happens. So then. So we're almost at the 9 o'clock bell and it looks like price is buying up. But I want to see the next candle close above and keep on buying up and hold. I don't feel comfortable getting this buy if it's going to fake me out. I don't feel comfortable with it. So I'm going to still wait. So here, it's only 5 pips. Not enough pips for me to earn the type of money I need to make. Now, if it blows past here, then maybe. So I'm just trying to pop through the white line, and we'll see if it does. I put in my stop loss and take profit just in case it was ready. Now, since it pushed up to this point and it's resisting it, we might be bearish because it pushed over the 200 EMA. But we'll know for sure if it crosses this line and goes up, then we are officially bullish at that point. But I want to wait for a clean break and retest in this area first. And if it breaks and retest, I want to see if the candle's going to hold and continue to go. So we got 5 minutes until the 9 o'clock bell. And let's just wait and see. We see prices retracing back. So let's wait. All right, so now we're at the 9 o'clock candle. Looks like the euro wants to push up, but you see across this white line. And they continue to hold and gain momentum to go up even further. So let's wait and see. But we're at the 9 o'clock candle now. Looks like price is trying to go against my line here, and it looks like it's pushing. But I want to see if it's going to hold or is it going to wick and retrace back. Looks like it's pushing up, but it could be a fake out. It's pushing. All right, I'm gonna go in for the buy. We'll see what we get. Oh, we're shooting up, y'all. It's shooting up, but hope it's not a fake out. I hope it don't start retracing back though. But we'll see. Might have jumped in too early, maybe. But I'm gonna hold it and see.
What pair is that? That's EU?
Yeah. I'm gonna hold it and see if it goes.
I haven't traded EU. I don't know how long.
Same here. Same here. Might have got in too early. It might be tracing just a little bit. But we'll see. Pause this recording.
I'm a little scared.
All right, so 200 made there. Man, they keep on taking out with those charges, man. I just want to smack them. Brothers be like, yeah, we're going to take some of your money since we're going to put you in this market. We don't charge you. So I just trail my stop loss. This thing is buying up. I love it. It's filling this imbalance gap here.
Silver going down.
And I'm going to do some here real quick. Almost a $200 profit. Man, they take so much out with these charges, man. It makes me want to smack them. Jeez, man. But looks like it's buying up. Still 23 in profit. So let me switch to the main screen. Trim the stop loss even more. There we go. I might just close out 24 in profit. That's what I'm gonna do. So $221 made. Turn my phone screen again. I'm gonna still keep on buying up. Yep. $221 in profit. So that's not bad. My goal is between $200 to $300 a day. I'm pissed with that. So that was about 12 pips and still made that. Not bad. But now it's kind of retracing a little bit. Let's see how far it's going to go. Pause real quick. All right, guys. So I made my money for today. The demo. The reason why I'm doing the demo is because I am practicing for a challenge to get funded. So my goal is at least $200 a day or more. So we made that. So that's it for this session. Something tells me that at the 9:30 bell, Euro is probably going to sell down. So if it sells down, I might catch me sell later on, but I made my money for the day. So that's it, y'all. See you guys later.